Welcome to this video day, Saturday 5th of August. We'll be looking at 3 trade setups today: GBP, USD, USD CAD and AUD USD. We've looked at these charts before over the last week or so. I'm just going to bring you up to date with my view. And what I want to do here is just, we'll be focusing on very simple technical analysis, but also very focused on trader sentiment. Now, if you want to become a really successful trader, learn to judge sentiment. It's what the top traders in the world do. They keep their trading or their technical trading very simple, but they're very focused on trader sentiment. If you can judge it, you can get really great risk reward entries on your chart. You can also make a judgment on how far a trend might run as well, which you just purely can't see from the technicals. So let's start with our first chart, which is going to be GBP USD. We're on the chart of GBP USD daily. We obviously looked at this chart on Thursday and gave our view on it. I just want to bring our view up to date and also just go through trading news events and working out the sentiment of the market to help you with your technicals. Okay, now in terms of Thursday, when we did our last video, it was obviously Bank of England, Super Thursday, very important for the GBP. And I've noted the candle here. And on Friday, of course, NFP, that's important for the US dollar against all majors, including, of course, the pound. Now, in terms of our video on Thursday, we were saying, the market was generally hawkish about the Bank of England, or thinking they're going to be hawkish about raising interest rates. We said that view was probably in the market and also misplaced. And I gave the reasons on Thursday. You can just go and look at the video. The Bank of England were going to be cautious. So what we did on Thursday is we saw the pound just pushed up to a new high and stalled, okay, before the BOE. And, we want to sell it, okay, because we just don't agree with the market sentiment. Market sentiment just too hawkish on the Bank of England. So what are we going to do? We're going to go through the 132 level. So the bottom of these two candles. I always like to get a round number cleared out. So we decided to go 131.80. Bank of England, as expected, disappointed the market. Pound comes down, settles nicely away from the 132 level near the lows. So we can now bring our stop down if we want, closer to our entry. So behind the 132 level, which should act as resistance. Now, in terms of on Friday, we had NFP. And if you read the news wires about the US dollar on Friday, universally bearish. You just have a real bearish sentiment against it all. They're saying if non-farm payroll disappoints, the dollar is going to be sold off again. Well, our view was that 180,000 jobs expected. The Fed only need 100,000. They've already said that. So even a poor number wasn't going to hurt the dollar with such a universally bearish sentiment around. Of course, we came in slightly better at over the 200 mark, 200k jobs created. What happens? We drop again. Okay, now this is the dilemma when you're trading. Okay, we're in at 131.80. We're at about 130.40 at the moment. So it's 140 pips profit. It's an okay profit. It's not a big profit. Okay, now once you get above 100 pips, most traders want to grab it, okay? But you've got to hold your profits, okay? My view on this would be, why not take 50% your trade in? You always do 2 trades, and you've got the option of taking 50% in, okay? So you can take out 140 pips on half, you've got 70 at least, then bring your stop down if you want to. You could bring it behind these 2 candles here, which I think is about 131.40. So you're going to get 40 pips on the remaining trade if she doesn't run on. Now, of course, because you've got 50% banked out, for me, it makes me feel better to get some profit in at least, and then, make sure my trade can't lose. But, you've always got the option of putting it back in. So obviously you have to see how it develops, but if she rallies back up to here, you could drop the 50% back in at a better price, or this 20-day moving average, if it's decisively taken out, then basically put in your banked trade again. And notice how the 20 days held here, come back above it, just poke through here and held it here. Okay, so 20-day moving average, yeah, really important to us. Now, if you're putting the 50% bank trade back in, let it clear out the 20-day, and also I think the 130 level. It's a round number, okay? So you can see if she decisively takes out the round number, drop her back in. If the pound goes through 130, our target is going to be here. These two blue candles you can see me drawing the line from. Sorry, I can never get my line straight, can I? So you got this big candle here, this big candle here, the crossing of the bodies. You got tail here where she bounces from the 20. So I think she could well go down to here. Sorry, to the 128.20 level. So from the perspective of news events, just look and then think, is the news factored in, okay, in terms of a hawkish Bank of England and, of course, a bearish view of the news in terms of the USD. If you do that, it'll help you with your technicals, in my view. And yeah, the 50-50 bank, that's always a great way, in my view, of smoothing your equity curve, and it makes it easier psychologically to hold profits. Yeah, I just find it a great way, and I've said it in other videos. I'm just going to repeat it again. I just love doing two trades and having the option of banking one out, holding one. Now, in terms of the pound, obviously we'll see how we open up next week, so we'll update this one in the member centre. Now let's move to, what are we going to move to next? We're going to move to USD CAD. We are on the USD Canadian dollar daily chart, and what we do here in terms of judging sentiment is use the CFTC net traders positions. For those of you unfamiliar with them, check an explanatory video beneath this one. It's one of the most important tools in Forex trading for us. It's a fantastic tool to help you judge sentiment. Brief terms, what we're looking for is the non-commercials, the speculators, to either have a big net long or short position with the commercials opposing them, or we're looking for the two groups to really be buying and selling aggressively against each other. And what we've got today is the latter, heavy buying and selling between the groups, or the groups are opposing each other in terms of what they're doing. Let me explain. Non-commercials, longs in the Canadian dollar, 82,885. Shorts, 42,247. So 2-1 in favour of their bullish bets on the CAD, bearish bets of USD CAD, of course. Now, in terms of what's significant is their net change, okay? They put in 12,500 long CAD bets, taken out 1,525 shorts. That makes their net change around 14,000 contracts towards a bearish USD CAD position. That's a really big move on the CFTC net traders. Now, what are the commercials doing? Doing the exact opposite. Long by nearly 59,000, short by over 120,000. So they got, 2-1 in terms of their bullish bias on the USD CAD, obviously opposed by the commercials with a similar ratio on the other side. Look at their change. Over 17,000 short CAD bets going in, and they're taking out 2,500 longs, so a net change of nearly 20,000. So what we've got is the commercials accelerating their buying, speculators accelerating their selling. I just want to go and just discuss how these traders have moved against each other recently in the pair. Put up the top here, heavy commercial selling v heavy speculative buying. Okay, it was massive up here the way the commercials came in to sell, speculators came in to buy. Speculators get hammered. Okay, now on this big candle down here, the commercials, they still remain net short USD CAD, but they start to lighten their USD CAD shorts. They start to move their hedges. Then down here, as we move towards 125, the commercials start to move net long, specs move net short. So the spec's been hammered on this big move down. Now they want to sell the USD. Now, in terms of CFDC net traders, someone posted something very interesting in the Facebook group that we run today, which is this quote from a bank. Okay, it says the net add to CAD longs of just over USD 1.1 billion in the week is the standout feature of the data. Now the net long CAD position reflects the most bullish the market has been on the CAD since 2013. Now they're just focused on the non-commercial speculators. They don't look at the commercials. Okay, so they take the non-commercials as being the smart money, effectively, which they are not. Okay, they can very often be right about a trend. They're always caught at turning points, though. This is a great example up here. And, we think they're going to get caught again, and they're starting to get caught. Now, in terms of this big candle here, I must say, before this occurred, it was the Bank of Canada. I was bullish. I wanted to buy above this level. But she tumbles down. You only get one small blue candle. We keep going red all the way down, okay? Now, it's all over the news, okay? USD is going down into oblivion, but there's nothing to stop the USD going down to 110, all this sort of stuff. But then you've got a bearish extreme. And you know what speculators are going to do if they're not in. They're going to want to hit the first rally, okay? Here comes the rally, okay? Here come the specs on the red candle to try and force it down, which they try and force it to a new low. They can't get past these two tails. So from our perspective, we took this as bullish. We just need confirmation on the next candle, which we get, okay? So there's your support. Blue candle comes up, okay? There's no more sellers to push her down now, okay? She doesn't finish at the high, but it's a blue candle. And we get an ADX 40 turn down. For those of you who don't use the ADX, it's very good at signaling the end of a long-term trend, i.e. warning of a good reaction or even possibly a trend change. You have to watch which way the trend is. Okay, so here the prevailing trend is down. Doesn't matter with an ADX 40 turn down. Trend can be strong downtrend, strong uptrend. You look for a move the other way. So what we've done, just come in above 125.20, moved up here. Okay, on this candle, I was, last video I did on this, I was saying, we're touching the 20-day moving average. We need it to be taken out, really. In strong trends, the 20-day moving average will very often provide resistance. Okay, you can see it. We break the 20 here, yeah? Go down, come up, can't get through. 3 tests, can't get through. And then we tumble lower with no test of the 20. Now, when you get a bearish extreme, I'm always looking for the 20-day moving average to be run. Saying in the last video, when it got to here, okay, and comes off, it's still a blue candle. Do you hold or do you bank 50%? It's the thing of when you're really trading in the moment, isn't it? What do you do next? So from our perspective, we just decided to lighten by half. We think, it's a really bearish extreme. So if we do come lower, we just add the other half back in. Or if we take out the 20, we'll just add the half back in, or the 50%. That's what we did. We came in as we got through the 20. Got a nice blue candle. We cleaned out the 20. Now we've done that, I still think there's a lot more stops to be hit. So where's support? Well, I'm going to take the top of those 2 candles, those 2 big ones, okay, which is the bottom of this body. And also this tail nearly touched it, can't quite manage it. Now we've moved up, okay. And, at the minute we've got, an okay profit, 125.20 against 126.60, isn't it? So, what is it, 140 pips? But obviously, we're looking for more. And from our perspective, where's it going to go from here? We still think there's plenty of stops to be hit. The obvious level, I think most traders would say, would be 129, around this big red candle coming down. I think we'll get up to here for sure. But as I put in the member centre, I'm bullish, very bullish. I'm going for 130. Okay, so 130 is a very significant level, okay, for hedgers in particular. So I think we'll get up to 130. And actually, I think we could even possibly run on to 132. So if you're not in this trend, there's still plenty of upside. If we push up through the high on Monday, you've got support at the 20-day moving average, okay? And you can tuck your stop back, well back from this tail, say 125.40, something like that. And you've got really good upside potential. A lot of traders don't want to get into a trend once it's got emotion. They want to buy the pull back. This one, it could pull back, but I wouldn't wait. If she goes higher, just go with the move. And if you're bullish, yeah, you can see how it goes like we're going to do. Yeah, we're so far a little bit of profit on the board, but if our targets get hit, and of course it's an if, it'll be a very nice profit. And yeah, CFD net trades make us very bullish. We've got the ADX 40 turned down. That adds weight to our view as well. So that's my view of USD CAD. Now let's move to the next chart, which is going to be AUD USD. On the CFDC net traders data, I'm just going to show it graphically on a chart before we go and draw some levels. And this is a nice chart. It comes from COT base. Shows positions graphically. Commercials in red, large speculators in green, small specs in blue. We're not interested in small specs, just these two big groups. So what we can note over here on the right is that the speculators have their biggest net long position on the charts. Commercials, their biggest net short position on the charts. That points to a turning point. And if you look back on some of the other divergences, you can see how the groups do against each other. So like here, when the specs go really long into this peak, they get hit, okay? Commercials heavily short. And then we go down to here. But look what happens when we're at this important bottom. The commercials suddenly come out of their shorts and go long, just as the speculators go short, and we see it move up, okay? The Aussie dollar, okay? Now, this peak here, when you see the speculators really step up their buying, into here, commercials heavily short, comes down in favour of the commercials. Then the speculators buy the dip and go heavily long into this top here. Commercials accelerate their selling, get a big move down. Then look what happens. The speculators who've been hit, who are long the Aussie dollar, decide to bail out of their longs. Commercials go long into this bottom. Up we go. And then they start to shed their longs here. And now we've got this big divergence. The big divergence points to the Aussie being overvalued. So let's go and look at how we're going to play this on the chart and draw some levels. The USD daily chart, and if we look at it from back in May when we had this double bottom, it's been a nice uptrend, come back towards 20-day moving average, don't quite touch it. Then we come to the 20, find good support and really push up to the upside, okay? Now, in terms of this chart, we know that, yeah, commercials heavily short, speculators heavily long. This candle was significant for us. A nice big push up, this tail, reverses back, finishes near the low. And we thought at the time, it's not going to close above the 80 level again. That should be the end of the up move, okay? Now, come in short, come back to test. We get a little poke through here, but settle back. We don't close above 80. The fact we can't take out this tail, we think that the buying is exhausted. Now, we're also backed up by a 40 turn down on the ADX as well. That's reinforcing our view. As I said earlier, it gives you a warning that the prevailing trend is about to change. Obviously, the prevailing trend has been up, and of course, now we're working our way down. Now, at the minute, it's just a minor profit, okay? But I think it could become a big one, and I'm very focused now on the 20-day, okay? Because it lines up with these two tails. So my own view is, I don't think we're going to get above 80 again, okay? So you've got really double trend lined resistance, okay? So the Aussie could be sold back up there. And, if we break lower, it could be sold through the 20-day. 20-day is 78.80. I'd let it get through 78.17. At the moment, we're kind of obviously in the middle of the range. Our stop remains at 80.80. We don't see, that tail being taken out. But until we get through the 20-day moving average, we won't be moving our stop. Then we'll bring it, tighter in behind the 80 level, probably 80.35, something like that. We'll see how things go. Now, where's the next level of support if this one is broken? We could say this candle here, this big blue one that finds support on the red. But we know the speculators are heavily long. So there's going to be a really big amount of stops around this level and behind it. So this level should easily get run. So from my reading of the CFD net traders, I think, we could easily get down towards the 77 level here. See that break above, the break above this candle here. That could be the first level of support. But really, I'm looking for us to retrace all the way back to the big push up. So I think 76 easily on the cards. So plenty of downside potential from here. And when you look at this chart with the CFD net traders in mind, you get a lot more confidence in where prices could go. If I didn't know the CFD net traders, I perhaps would not be as confident about my short position. Obviously, my short position could go wrong. We'll see. I personally think we're in for some good downside here. We'll see next week. We'll obviously be updating daily in the member centre. So that completes my review of AUD USD.